Hello and welcome to another update video about Polygon MATIC. The MATIC chart continues to exhibit a pretty bullish looking overall upside structure. If anything changes about that, I will let you know. Microstructures are very flexible and fragile, and what looks bullish today could look bearish tomorrow. That's why we are tracking the relevant parameters very closely every day, maybe not every hour, but several times a day. Obviously the microstructures, they are being observed, and we are watching if the parameters are still being respected. I typically mention these parameters to you in these videos so you can watch for them yourselves. At the moment, the primary scenarios have been followed here by the price nicely. Also yesterday, we've seen the price break out above the recent high, which was formed on the 10th of February, here around 87 cents, and we're still maintaining above that previous high. So as long as we continue to push higher against this structure, this overall roadmap to overall, $2.12 plus over the coming months maybe is relevant and valid and can be kept alive. Pullbacks along the way cannot be ruled out, and it's even still possible at this stage, and also not unlikely, that this larger wave 2, this corrective pullback that presumably finished on the 23rd of January, that this is still unfolding, okay? So I just wanted to emphasize again what I highlighted yesterday, that this could easily be, instead of an ABC complete, ABC, it is entirely possible that we have a slightly different structure, which would be a W, or more actually, it would be WX, so that would be a flat structure, WX, Y, and the Y wave would be an A wave, and the B wave, and a C wave. And we're now in the B wave basically, okay, B wave rally. That risk is still there. I cannot rule that out, okay? So in addition to that, we might want to add some Fibonacci resistance just to check in some relevant additional levels. I think, however, the market did not really respect those levels at all. So there's, no, that's good news, because had we seen a reaction to this level here, strong reaction, or here, which we didn't, golden ratio, the market didn't care. But be aware of the 89.5 cent level. That's just another Fibonacci resistance level. I might just leave it on the chart just as a level itself, so we can watch it. It's just in case this was a B wave rally, this is a level to watch. It's not a super reliable level for a B wave, but it's still somewhat important. So that means further break above 89.5 cents would be further evidence that we are moving to the upside, that we're following this roadmap on the chart, and the primary scenario still suggests higher prices against the 83.2 cent level. That's the one that I mentioned in yesterday's video as well. And we're dealing here with a situation in which we've got a wave 1 to the upside, a wave 2 pullback, another wave 1 to the upside, and a wave 2 pullback. And we could now be in this third wave. This wave 2 was quite shallow. Well, actually, yeah, no, it probably wasn't. Not too shallow, because I mentioned it yesterday. It depends on how I draw the fibs. So it would still be okay as a wave 2. But bear in mind that the more bullish we go, okay, and the more we are advancing in a third wave rally, pullbacks might just be shallow. So what I'm watching now is possibly this third wave to extend to 98 cents plus. 98 cents would be the first ideal target. 96.2 cents would be the minimum. So we could see here now the development of this third wave, which should be a 5-wave move itself. 1, 2, 3, 4, 5. This micro count or nano count, unreliable. I just show it to you because we can use some additional parameters here, but honestly we're now on a very small time frame for an altcoin, basically very much, I wouldn't go any smaller. And obviously the smaller the time frame, the smaller the predictive qualities from Elliott wave. But we can still use that micro counting to get some levels for risk management. And there's a support zone now between 86 cents and 83.2 cents. Basically this move up could be another wave 1. I've checked the smaller time frame. Looks like 5 waves up to me. So it's possible that it's now forming here a wave 2 pullback of that larger third wave, A, B, C. And yeah, it doesn't need to come down lower. Okay, that's what I mean. It's very fragile, these micro counts. And in a very bullish third wave, it's even possible that wave 2 already finished here. Unlikely or less likely, but we need to be aware of the fact that we are possibly in a third wave rally. So pullbacks might be extremely shallow. Sometimes at some point, the cryptos, when they move, like Rune, end of the year, they don't show any clear pullbacks anymore. They just go, right? So that's always worth keeping in mind, which is why a core position can be so helpful. At the same time, a sustained break below 83.2 cents, and that's really the main benefit of adding these support areas. A main benefit of it is that we know when it's breaking. So a break below that 83.2 cent level would be a first indication that something is changing, even though it might just be the microstructure and the larger uptrend remains intact, but it means that we have to be watching it. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.